Hi, it's Mike here from Vant Trading. We've been getting a lot of questions on how do we pick our stocks to trade for the day, especially when the market's down. How do you find so many stocks are really good plays? So I really wanted to go over that today in a quick little video and show you some real world examples of what we actually traded today. Choosing stocks with a market that's in a correction is can be tricky. You got to realize trades need to be short. You don't want to spend. It's not a time to really initiate swing trades. It's not a time to do backseat driving, and if the market goes up, say, "Oh, should have been stayed in that stock." Really, the key to be successful in trading is making sure you put the odds in your favor. So the first thing we do is we look for stocks that have their own independent price action, which means the correlation to the market is low. Now, a typical correction, which is what we've been in over the last 2 trading days, typically lasts 3 days. Okay, now that's not always the case, and you can have different movements within a particular correction. But we look at the first 2 days. You got to be extremely careful, and we're just really in and out. Day 3 is a little bit. You can maybe extend your trades a little bit more because typically by day 3, the panic has settled down, the selling pressure has settled down, and it's more methodical. Yesterday or the day before in day 2 of the correction, we saw the market come down pretty sharply and then bounce back above its 21-day moving average. So the key is you got to always have the market and its generals up on the screen, looking at the internals, see where the market's going, because even if a stock has proven not to be as correlated or didn't fall with the market, you still got to keep the market, an eye on the market to make sure it's not going to affect your stock should that panic selling ensue. Because even if a stock has been pretty strong throughout the selling pressure, you can still have some kind of effect. So what we look for is stocks that are in a bullish setup. They're still above their 9-day EMA. They're above their 21-day EMA, and they're above major resistance, and they're above prior days lows. So look for stocks that have been particularly strong. Now, important factors when you're looking at the market, okay? The very first thing that we look at once the market opens is we look at the opening print. We make sure we have that on our charts. We have a system that the print automatically draws a line because we're looking for turning points. And the opening print typically is a good turning point. What we love, the setup that we love, is when stocks drop at the open, below their opening print, and then come back through that opening print to make new highs. They're the type of stocks that we like, and that's what we look for when we're dip buying. So the opening print is really important. The prior day's low is very important, especially when you're a market sell-off, right? So what you want to start to see is some stabilization. Okay, and you may have the market come down and break that low, but the key is, does it stay below that low, and then does that low become resistance, right? Or does it break through it and then come back forward, and then maybe it comes back and tests it again? That's good positive basing action that we're looking for, and it gives us some confidence that a turn could be in. And then obviously we look at VWAP. VWAP's one of the most important tools that we use to trade. We look at the intraday 22 EMA, and then of course support and resistance. Okay, so we look at pre-market highs, pre-market lows. What's some of the major resistance and support levels on the daily chart, and where is the 9 and 21? Where's price action in consideration to the 9 and 21 on the daily, and also to the 200 and the 50? Okay, and then as far as market internals during the day, we're looking at the VIX, we're looking at the tick, we're looking at the trend, we're looking at advanced decline issues, and we're looking at the volume of advanced decline issues. And then lastly, we're looking at the generals. The generals are the stocks that have led us. What led us out, okay, up to the highs, And, obviously those are stocks that probably getting hit pretty hard. And then so we're looking for them to see some basing action prior to the market, because the market's going to need them to lead us out. Okay. Or is there going to be new generals that emerge? And that's very possible. So let's take a look at the SPY chart now. Okay, and see where we are as far as the market's concerned. This is the SPY daily. So as you can see, we are today was day 3 of that correction. We had the break from the top of all-time highs. The very first day we came crashing through the 9 EMA, which is that dotted line right there, and then we found support that first day at the 21. So that was pretty positive. And then the next day we went crashing through the 21, and then tried to hit down. We came down to some support down there, and then we bounced back up and closed right at the 21 day, which was some positive momentum. And then of course today we opened well below the 21. Never really hit the 50, which I really wish we kind of would have. To get that support. So, but we did hit that important level of that 333. So, that was an important level that we were looking at. And, if you look over to the left of the chart there, that's really an important level, because it's like what I like to call the scene of the crime. That is where the S&P back in February fell from. Right. So the market finding support there obviously was very important. Because it's like, okay, well, no, we're not going to let it go back down, past to where we were, going negative. So basically we're at 0 today, at the close. Now, obviously what I don't like is the fact that we closed at the lows. That's not quite positive action, for the day, but still it provided some really good, trading action on the market. So let's take a look now at the daily, the action of the SPY today. The SPY, again, you see this blue line down at the bottom. That was yesterday's low. That's an important point that we're always looking for. If you see, we went up in the morning, tried to touch VWAP. You can see the opening print there at the dotted line. Went and touched VWAP, tried to pretend we were going to go above, and then they dropped us almost immediately through yesterday's low. And then they brought us right back up to an important daily level, okay, that 335 on the SPY. And then they took us back below, but we made a higher low, okay? And if you look, they took us through VWAP, through the opening print, and then brought us right back down to test that, they test that Friday's low, and it found support. So right there, that was the key. And what we did, typically we wait till we get above VWAP and stuff like that, but that action, typical action, positive basing action. And so we had a nice short-term little trade. We took some calls right there and rode it all the way up for a nice little gain. And then again, they took it above the opening print, and then they brought us back down to VWAP, found some support, and then took us up, to the day's highs. So we printed the day's highs at 10:30 in the morning for the SPY. It looked like, you got to remember, and then the problem is a lot of people, they forget where we are, right? And they think, oh, we're going right back to highs. Well, that's just not the way the market works. So it proceeded to get into a little bit of a chop fest here. Matter of fact, we even came back down around 12 o'clock to where there's typically almost no volume because people are going down to lunch, to test that low again. And again, we found some support in there. And then, the market kind of came back, tried to come back up to the daily highs by like 2 o'clock, and it looked like they were going to try to drive us positive. The small caps IWM was really looking positive, but, it just wasn't to be. And, there was a nice little sell-off going through that low and going to that scene of the crime that I talked about on the daily chart and kind of settling down there. So interesting trade action. That's where we closed. So it still signifies possible more down movement, but this is day 3. So, it's kind of indecisive action here. I think we're at an important level, and I think we have a good opportunity to bounce from here. So, that's something to take in consideration. All right, so let's go through some of the stocks that we traded. The first one that we found that was on our watch list in our morning trade meeting was Workhorse. okay? Workhorse, you know, as you'll see when I pull up the chart, it was above the 9-day EMA. It was above the 21-day EMA. It was above major resistance. Daily action, it crossed, it dipped below the opening print, crossed back up above it, and VWAP was pretty good support, and it was above the prior day's low. So all the positive action that we were looking for in the stock was there. So we actually provided this 2 trades. One was an 8.3% trade, and I'll show you on the chart. And the other one was a 5.9% trade. So again, short-term trades, not really looking to hold any stocks in this type of market action, not ready to establish a tier system yet or hold stocks for a little bit longer term, because you just don't know when the action is going to stop. So let's take a look at the daily chart of Workhorse. This is a daily chart of Workhorse, so you can kind of see the very first day right here that we had weak action. It kind of fell back through with the market into that, you know, below that resistance line, and you know, it was down below its 9 EMA, and you can kind of see the 21. It found support right there. Nowhere near its 50, which was pretty far away. And then what was really positive was day 2. It opened, you know, below the 9 EMA, and then closed and went above resistance and closed close to the highs. So this, on a down day in the market, okay, in a correction, you know, it was close to its highs, above major resistance, above the 9 and the 21 day. So very positive action. And you can see we were opening, you know, we were opening down a little bit, but we were above the 9 EMA. So that was really an important point. And so this is some very positive action for Workhorse. So let's look at the intraday chart and how we traded this. So zooming in here, if we zoom in, this is the daily intraday chart on Workhorse. So if you look here, the orange line, that's the opening print. So the very, you know, we like to stay out of stocks, especially now. There's no need to rush into stocks. There's no need to get to bottom. First couple minutes, 5 minutes, you got price discovery. And this was really positive action. So they drove it, they opened it up, they drove it down below VWAP. And then you can see that second bar, they actually, you know, opened it below VWAP, but then closed at the top of that bar range. That pink dotted line is the point of control for Workhorse for the pre-market. So they closed it above that pre-market, and you can see this basing action up here with the first red candle, you know, because we're always looking for some kind of pullback. Well, here you got, it's a little flag, right? You got a little bull flag here, nice little consolidation above the opening print, above the point of control, or above VWAP. So this was our key to get into this stock. We got through price discovery, so we felt very comfortable. So we got in, this was our first trade, got into Workhorse, and it went right up, you know, right up, straight up, and within 5 minutes, we were out of the trade, right up, you know, close to the highs right there. You see, when you, and another important point, when you get some exhaustion candles, some big candles like that, you know, you want to take what the market, the gifts that the market gives you. So if it gives you an 8% trade, take it. Okay, don't try to squeeze out more, right? And so you can see these 1 minute bars, and there was really no reason to get out until really that 937 area, you know, the first exhausted candle right in there. So nice little trade in Workhorse. And then what happened was it came back down, you know, it came through VWAP, and you see that blue line is the 22. So it held the 22. This other line here, this other blue line, it was yesterday's high. So, you know, it came back kind of, you know, it pierced through, and, you know, it found support. You know, it got back above yesterday's high. It got back above VWAP, kind of started look like it was going to go up again, and then came back in a flag-like pattern and found support at VWAP. So this gave you opportunity number 2. As you see, this white line is the pre-market high. So now, as it found support at the pre-market high and came back for a base right here, this red candle, it gave another opportunity to get in the stock, okay? Because the stock was showing some good basing action. It looked like it was ready to go, okay? And another good thing about this, if you look at this, is that it's really short risk. We like trades where the odds are in your favor. The risk is very, we're not risking a lot. Right now, that pre-market high is around 2021, and we're risking all the way down to VWAP down here, okay? So, VWAP, about $20. So, we're not risking hardly anything, okay? We're risking 1% on that trade, but as you can see, gave us nice action. And as far as our exit, we're pretty much, as long as it's following the 22, that gives you a good base. It really never violated, found support the 22. So we rode it all the way up until you get that break right there at the highs around 1030 of the 22, and then we were out 5.9% trade. Beautiful trade on Workhorse. So you can kind of see, and if you look at the action later in the day, you probably maybe could have bought again as it came back down to test VWAP, but we were pretty much done for the day in this area, and it was two good trades on Workhorse. So let's now go back and let's look at our next stock. And the next stock is Tortoise Acquisition, which is SHLL, okay? SHLL, another one of these SPAC companies. And again, let's look at this. The stock performing very positive, above the 9-day EMA, above the 21 EMA, and above major resistance. As you'll see, we get to the chart, it crossed back above the opening print. VWAP held as support, and it was above the prior day's lows and above the pre-market high and the prior day's highs. So let's now take a look at SHLL. First off, let's take a look at the daily chart. And the daily chart, you can see day 3, SHLL had been at all-time highs. It was in a full breakout. You can kind of see back in here how it had consolidated above an important level after breaking out, and then had that nice long bar and then a gap above, almost an exhaustive blow off top for SHLL. And so you would have expected SHLL to be one of these companies to really get hit hard in this market pullback. But really, you had a interesting candle on the first day of the market pullback, almost a doji candle, long wick down, long wick up. And, it's interesting that it didn't finish as weak as the market did. So it kind of kept our eye. It did close this gap on this breakout, right? And it came down to the 9 EMA, found some support, but closed well above it. Okay, and then day 2, it did pierce through, just like a lot of stocks did, but still, really, it closed strong, closed green, and well above its 9 EMA. So this gave us some really, good-looking price action. You didn't see SHLL really get hit that hard. So this really, wound up on our charts for today. And let's look at some of the actions, some of the trades. So looking at this, let's zoom in on the open. Again, love this action. Went up to the opening print, went up to the point of control for the pre-market. They brought it down to VWAP, brought it below VWAP, down to the pre-market lows almost. Okay, looked like maybe it was going to be a weak trade, but they found some support in there. They got it above VWAP. They got it above the 22. And then that bar, this long bar right here, you can see, found support at VWAP. You were above the opening print, and it took it above the point of control. All positive stuff, all positive action that led us to get into this stock right here on the long side. And, they drove it up, here to the prior day high. They drove it up to the pre-market high, and then they exhausted themselves, and we got out in a pullback down to this pre-market low. And again, this was a 6.3% winner on that trade. We'll take that every time. So then they brought it back down. We love, look at this little doji here. I forget what they call that, but nice looking bar that typically represents a reversal. They brought it through the VWAP, they brought it through the point of control, and then a nice exhaustion bar up through the VWAP and also up through the yesterday's high. And then you found some basing action in here, sort of a little flag. And again, we love this action here. it gave us an opportunity, low risk. Our risk is down, to VWAP here. So we got in this bar here, and they kind of consolidated it around the pre-market high, and then they took us all the way up. And we got out in this basing action in here. And again, could we be held back down to the 22 and maybe took it up? But, this was a 5% winner. So no reason to really, play around. And again, this stock kind of fell off with the rest of the market later, but still gave you some nice basing action, low risk trades, which is what we're looking for. So that is on SHLL. So let's go to the next stock that I want to show you, and that is Foot Locker. Okay, Foot Locker, again, another interesting chart above the 921, and also you had the 200-day as a major level right there as support, which we really like. It was above major resistance. Again, another stock that crossed back above the opening print. VWAP held as support. It was above prior day's lows and then above the pre-market high. Days high. So again, Foot Locker, not a stock that has a huge ATR. So, this wasn't going to provide us a lot of return in a short-term trade, but, let's look at the daily chart. So if you look at the daily chart here, really bullish price action here. Even when the market, so prior to on Thursday, Foot Locker had kind of broken out a little bit above its 200, held above its 200 right there. So that was positive action. It was above it, that consolidation. We love, see that long consolidation period. That is a really, that's the same consolidation period. We looked at Roku. We had a huge breakout in Roku. Same consolidation period. We looked at AMD, had a huge breakout at AMD. For an extended run. So we love that consolidation period. We love when we have breakouts out of that consolidation period. So again, Foot Locker is nothing like those stocks that, have huge ATRs and are going to really move, but it still can give you some nice action, consistent low risk action, and I look at Foot Locker possibly heading to the, mid 40s possibly. So, good action. So on Friday, when you had that low, the good positive news on Foot Locker is it found support at the 200, meaning it closed right at that 200. And then it, it gapped above the next day when the market was coming down, and it, pierced that 200, but still found some good support. So that gave us some positive action. Because it was going to be weak with the market and be correlated, it would have broke that 200 and it would probably be back into the zone like a lot of stocks have. So let's now go to the intraday action of Foot Locker. And, again, some of the same action that we found on Foot Locker, they break it below the opening print immediately, below VWAP, and then they come right back up and they go up to yesterday's high, and then they find support at VWAP and then at the opening print, and it gave us perfect opportunity to get in. Low risk trade, very low risk. It's either going to work or it's not, and you get out. If things don't work and the thesis doesn't work, you get out. And nice little trade up through yesterday's high all the way up until it kind of found those, reversal candles right in there and, got out the high. That's a nice 2.3% winner. And then it came back down, did some interesting action. You can kind of see it consolidated below, right at VWAP. I would consider that at VWAP. But then it made a lower high. And so, we were watching this, and as it came down below yesterday's high, the opening print, remember what I talked about, we want to find that as support, right? Well, it found it as support, and I usually don't take trades below VWAP, but a nice little opportunity as it was finding some basing action for a possible dip buy. And, again, low risk, right? You get in, and this is what I call an anticipatory trade. You're trying to get in before you get that break of VWAP and thinking it's going to go higher in reverse. Well, if it breaks below that opening print, you get out and, you risked very few dollars. So it was a good opportunity to get in, dip buy right there at support. And, of course, it took it right back up through the high and right at VWAP. Nice consolidation, gave you an opportunity to add to that trade and, and again, bring it back up and, nice 1.5% winner, right there as far as an opportunity in Foot Locker. So, and it gave us it gave us those two trades. And again, two trades, you really don't need a lot of stocks if you get trades like that. And then the last stock I wanted to go over was Southwest. We did not trade Southwest. But I wanted to show you some of the charts, and let's go to the show you what the chart looks like on Southwest. And Southwest, again, that positive action right at the 200 moving average. I kind of like the fact that this thing was right, just below the 200 moving average as the market opened. So as we click on to see this action, you can kind of see the action here. The dotted line is the opening print at the bottom. The dashed line is the 200 on the daily chart, of course, an important level. So they bust it right up from the get-go, right? They didn't even go below the opening print, which is a positive, obviously bullish sign. A possible drive day. VWAP was being used as support. We didn't take that trade. It went above yesterday's high. It went above, the 200. It went right up to the prior day's high, and then kind of popped back down. Okay, and actually, I'm sorry, this first blue line was yesterday's low, and then I believe the other blue line is yesterday's high, kind of small range in there. And then, they brought it down, and I kind of circled this because I love this pattern. When you come down to the 200, you expect to find it as support, right? But you got to remember, there's a lot of people that are getting in trades. They're using that. They set their stops, and a lot of amateurs will set their stops exactly at the level. But the problem is what they'll do is they typically will pierce that level a little bit, try to drive out some stops, and then run it back up if it's going to hold as support. And so a lot of times when you do get that support, you get a really big, consistent drive move up, and it typically lasts a couple days. And as you see, you got a nice little drive move up from there. It would have been a nice little trade in on Southwest, and it stayed pretty positive. The market went weak later into the day. So again, we don't care what we think about our view on the airlines. We don't care about whether we're going to hold this long term. This is a short day trades only. Possible maybe get into a possible swing trade, but definitely Southwest Airlines will definitely be one that'll be on our radar tomorrow. And we also had some action in the banks. We thought the banks were going to do the same thing, just they were pretty weak today. TLT was strong, which usually inverse relationship. So the banks really weren't participating today, but if we do get a rally, look for a change of leadership. Look to see if these stocks are going to stay strong and if tech stays weak. So that's it. I hope you got a lot from this video. We went over a lot of different things, and you got to know what market you're in. And as we go into and start recovering, if the market starts going up, then we'll probably change some of our trade parameters. But the key is not to be a hero. Don't try to find the top. Don't try to find the bottom. Just trade the price action that's given to you, and you'll be very successful. And look for low risk trades. Remember, keeping your money is the first goal. Thanks, and I hope you have a great day.